Today's session is brought to you by Emerald Financial. Emerald exists to help investors make informed decisions about their investments. We offer a range of services to help educate, support, and motivate everyday people to get involved in the stock market. We offer services for any experience level. Now it's budget time, guys. Okay, we saw the budget released earlier this week. We've spent a little bit of time digesting it, going through it, and looking for opportunities in the market. So today I'm going to have Sam Green and Michael Cornups give you a bit of a rundown on the budget. We're not going to go into too much detail on the budget because many of you guys would have already looked through it or read the headlines. But what we're going to do is actually talk a bit more about what sectors will likely perform well in the near future on the back of the budget, and talk about a few stocks on the back of that as well. So without any further ado, I'll hand you across to Sam Green and Mike to run through this. Thank you.
Well, Mike, what can we say about this budget that hasn't already been said?
Well, I think we know the general gist of the budget. It's a very generous budget, plenty of money for everybody, and I think the big picture is it's an election budget.
Absolutely. So, we're coming to the end of this federal term. They're going to have to call the election some point between August and May next year. And, it's a great time for a government to spend if they want to get re-elected.
Which is exactly what they've done. So they've spent nearly $200 billion over the last 12 months. The latest tax numbers show that the government expenditures formed close to zero on a month-to-month basis. But when you look at the budget, the forecast deficit for the next 12 months is $100 billion odd, which means that they are taking an opportunity to spend.
Yep.
And they are looking, if you listen to the Josh Frydenberg's speech the other night, they pretty much catered for every section of the community to give them a little bit of relief and to create some confidence. And I think overall the budget was well received.
I think so as well. I think a lot of, you say they sort of catered to everyone. I think there was a little bit of a skew towards sort of more the elderly and, the utilisers of aged care services and healthcare services, with increases in funding for aged care and the NDIS, for example.
Yeah, so in short and cynically, they looked after the voters, the swing voters, which pretty much they got punished by they could have got punished by the last election. Yep. Labor thought they brought down a conservative tax budget, but they were punished for punishing the small voter.
Yeah, absolutely. So we touched on that. Big increases in sort of aged care funding. That is one sector of the market that we think could respond quite positively to this budget. So we're talking, the Estia Health, the Japara Health, the Regis Healthcare. Those sort of providers could be sort of big beneficiaries of this large spend.
And of course, the small business, they've had their instant asset write-off continued on, which is quite good, and we see it in our business. We're able to buy, spend money on capital goods, and it's instantly written off. And of course, the tax offset, $1,080, and you can be eligible for that. It's not a straight giveaway. In effect, that if you owe the tax office some money, you'll get the $1,080. But if you don't have a tax bill, they won't give you a refund. So all it can do is reduce your tax bill. But they've budgeted $9 billion odd for that benefit. Overall, I look at the individual breakdown of the revenue components. So the tax offsets, the giveaways sort of drop the annual revenue by about $20 billion a year.
Yep.
But because they're one-off giveaways, the tax bill comes back the following year. So interestingly, it's not a permanent tax cut, i.e. the tax offset. So those tax rates come back the following year. And of course, they're talking about abolishing the 37% tax rate. So between $45,000 and $200,000, it'll be a flat 30% tax rate. So it'll be interesting by the time 23-24 comes around whether they'll keep those cuts in place.
Yeah, it will be. So it was our view, I guess, a few years ago, that this was a government that was very much trying to get the budget back in the black, very much on the sort of form of cutting spending and trying to sort of balance themselves. And it was interesting to see that this budget forecast, the first surplus in about 10 years' time. So they've recognised that, even with the increase in taxation receipts due to high commodities prices and due to probably better than expected economic growth after the virus, even then they're still pushing out a budget surplus for 10 years.
Yeah, correct. So I think politically, COVID gave the government an excuse to spend money. The Liberal Party prides themselves on being fiscal conservatives, and they, I believe, used the COVID as an opportunity to spend $200 billion, and have continued to use that excuse, you may use those words, for the next 2 years to run a $100 billion deficit, followed by a $60 billion deficit. And that is electorally appealing, and I think it frames themselves for a re-election.
Yeah, absolutely. Just on that, one of the things I think the assumptions they've made in the budget is that our key commodity, iron ore, will come down to about $55 a ton by the end of 2022, which appears quite a conservative estimate. Given that iron ore is up above $200, they're forecasting a roughly 75% drop. That does leave a bit of sort of budget catch up with additional receipts from the miners.
Yeah, it was interesting. They've projected the next 12 months GDP growth, real growth, inflation adjusted, at 1.25%. But the following year, interestingly, they've projected a 4.25% GDP growth. I think if they included an iron ore price of $150 a tonne, that growth rate would have been a lot higher, and I think probably people would have been a bit sceptical with that. So I think they know the iron ore price will come in at a lot higher rate, and I think it gives them a little bit of fat to be incorrect on a few other assumptions.
Yeah, absolutely. So there are a few assumptions. They're expecting unemployment to drop to about 4.5% by 2023. I think the Treasurer said something with a 4 in front of it is what they're after. So if the iron ore price does hold up, but we don't quite get 4.5% unemployment, it might help offset that. It was interesting to see that they did actually lift the Jobseeker payments, I think by about $50 a week from memory, which is not...
Unlike the Liberal government.
It is. To be fair, that payment hadn't increased for, I think, 20 years or so, but it is a budget where there's sweetness for everyone, I think.
I think so. I think clearly they've been generous to everybody. I think it's just definitely an election budget, and I think that in the context of a world economy recovering from the COVID downturn, I think it's just going to add a lot more fuel to the fire, and I think it will probably, from our point of view, create a fairly bullish market.
Yeah, absolutely. So this is something that we talk about a fair bit, but when the government is in deficit mode, or when they're spending more than they take in as receipts, that's pumping money into the economy. That's creating money for the private sector to use, really.
Yeah. But the problem comes in with the increased money supply, is that the velocity of money has decreased. So yes, there's been a lot of borrowing by government, which is increases in money supply. The private sector has slowed down a bit, so the government's done the heavy lifting. But as many people point out, that the velocity of money has slowed down. So we just over the last couple of days, we've had the spectre of inflation coming along. But my view is that with the lack of velocity of that money, where it just goes into a savings account and doesn't get spent, is a problem for our economy. The Freiberg pointed out that the private sector has saved $130 billion over the COVID period. He needs us to spend that money to get the economy moving. But possibly people are going to be a bit conservative, pay off debt. If you look at the monetary aggregates released at the end of the month, personal debt has year on year fallen by 10%. The business sector borrowing has fallen 2.5% year on year. The only part of the private sector that's growing is the home loan market. Now, I think that in the long run, that'll be structurally inefficient for our economy that relies too greatly on the home market. And you can see the further stimulus the government has put into encouraging the increase of prices of homes, i.e. You can withdraw $50,000 from your super, up from $30,000 of your own personal contributions you can take out of super to put to your home loan. People over 60 years old, they can, if they sell their family home to downside, they can make an additional lump sum contribution to their superannuation. All these things are happening to, I believe, to encourage the home loan market, the home price market to be supported, all encompassed by the Reserve Bank interest rates, which are sort of going to be zero interest rates for the foreseeable future. So here we have a stimulatory budget, $100 billion over the next year, in an environment where interest rates are going to remain zero. The RBA is controlling the yield curve in the 3-year. It's pegged the 3-year rate for banks at 0.1 of 1%. That will keep the banks profitable in lending to the home loan market. With the stimulus, I just see the natural expression of this stimulus is higher home prices.
Absolutely. So, I mean, they are putting a lot of eggs in the sort of house price basket. There was also an extension of the home builder scheme, an extension of, and an increase, I believe, of the lender's mortgage insurance scheme, where they'll pay a low deposit home loans lender's mortgage insurance. And yeah, that is just, serving to continue to inflate house prices. But again, there'll be winners on the stock market from that as well. So we're talking your construction materials suppliers, your CSRs, your Borrells, your James Hardys, but also, people who make houses, people like your Stockland groups, should also benefit from those schemes.
So my belief is that, and we've talked about it quite a bit, that I think the increase in inflation is only transitory. The US 10-year bond rate ticked up to 1.68% last night. I do not believe that those interest rates can rise a lot further. I think a lot of the inflationary impulse will subside, and if you do have that belief that inflation will come back down after the initial impulse from the levels from last year, you can start being bullish about the long duration assets like the technology sector that did benefit greatly from the zero interest rate scenario.
Yeah, absolutely. That's still, I think, a few months off, but I think it is worth noting, a lot of people are talking about the US inflation read from last night. It was the highest since 2009. And if you go and look what happened at the 2009 inflation read, just like this one, it was coming off, a lower base. From the year before, 2008, they had the GFC, and you had a bit of a drop off in inflation. So it was a bit of a base effect there.
Yes.
And then, other sort of
and I was just taking down some notes this afternoon. In terms of we've had disruption of supply chains, and that's put upward pressure on supply components. Those supply chains will be restored. There is accelerating technology in the world, and that is deflationary. The bottlenecks, as we mentioned, I think will be resolved. Increasing debt, which is a feature of the world economy, of the European, the Americans, and Australians increasing their debt, does weaken growth, and it does act as a deflationary force. The real gross domestic product per capita is weak. The demographics are a drag on the economy. We have Japan with an ageing economy, China with an ageing economy. That will be further dampen demand as demographics. We haven't got the young families trying to start new increased spending. And the big feature of what we mentioned before is all this increase in debt from government spending would be inflationary, but the money multiplier, the money is not being spent in the economy. It's going into asset prices, and the money velocity is just dying.
Yeah, absolutely. So you're saying there was the money supply growth, but the velocity is
the offset. So a lot of people will just say, "Oh, look, the Americans have printed all this money, therefore it's inflationary." Well, it's not if you don't spend it.
Yep.
If it's being saved and it's moving into home prices, a home price boom in Australia, there's a home price boom in the US. The US is in the fortunate situation of having a 30-year fixed rate market. So if interest rates go up, you do not get affected. Unfortunately, in Australia, being a variable rate market, if interest rates go up, will be the people who have existing loans will be affected.
Yeah, absolutely. And that is a big risk for a lot of homeowners who've borrowed at, very, very low rates, some of them very large amounts of money. And, we may see either a shortening of fixed rate terms, or we may see them start to offer, higher interest rates on those fixed rate terms.
So my concern, where we start is that today interest rates are zero and will be for the foreseeable future.
Mm-hmm.
We've just had a budget which is stimulatory. It's still spending $100 billion. They've put inducements into various parts of the economy. So I think in the short term, I think it's bullish for asset price growth still. It's only when I think the dangers will be in the credit market should there be a when the COVID started, the US government supported the junk bonds, supported the exchange traded funds. They've come in, pretty much bought everything. The question will be, is that if the credit market ever freezes up, that'll be the sign that, because there's too much debt, that could be the sign that a downturn's coming.
Absolutely. I mean, I think the great phrase is, there's no such thing as a credit crisis. It's just a liquidity crisis. And, as long as the government steps in to provide liquidity, or in that case, the central bank, it's what got them through the price.
A lot of people are quite bearish when they hear, America's printing all this money. But it's all relative. Europe's printing money.
Oh, yeah.
Australia's printing money.
Japan.
China's printing money. Japan's printing money. So it's relative. So when you're valuing your asset, the Australian dollar, against other assets who are also printing, relatively speaking, it has no effect.
Well, yeah. No, absolutely. So, we have to say it's a pretty bullish budget for the market. Stock-wise, there are some stocks that benefit a bit more. We touched on the aged care stocks. We touched on the construction materials sort of stocks. But ultimately, it's a big spend.
They love it. I think it's also, we are a politically stable country.
Yep.
At the end of the day, I think, you may agree or disagree with certain personal aspects of the politics, but at the end of the day, I think it's a fairly stable government with stable policies. I think people know what to expect, and we're in safe hands. It was unfortunate the Labor Party bringing all this tax, changing all the tax rules that would have disadvantaged franking credits, etc. Our market's not ready for that. A lot of people would argue that's the right way to go, and our tax system does need restructuring. But if you start ignoring segments of the economy, people will revolt and not vote for you. So I think it's an unfortunate aspect, but I think our country is a little bit beholden to short-termism.
Absolutely. That, and to be fair, a lot of people have planned for these sort of tax effects, the negative gearing, the capital, the dividend imputation credits and things like that. A lot of people have planned for that, and to sort of change that on them, as they're going into retirement or something, it does make it quite hard. So no surprise, there are a few sweeteners for people at that end of the life cycle, with the aged care spending. And this is a budget for heading into an election. Most likely, I'd say, right at the end of this year.
Interesting factor in our economy is that the immigration numbers I saw this week is net negative 70,000 decrease in our population, where normally we'd be expecting an increase in population of 250,000. That affects economies like Melbourne in particular, the capital cities like Melbourne and Sydney, who the housing markets are affected, where rents are going up across Australia, except for Melbourne, Sydney and Brisbane, who relied on the immigration coming in. It's affected our education sectors. But we have 12 months of stimulus from the government, and if by middle of next year and COVID's under control, we can restart our immigration. That will bring a lot more skills into the economy, which we're desperate for. It will add to demand for housing and add to the rental demand, and it will be a boost to the economy, which I think will possibly help the country.
Yeah, absolutely. And if they've sweetened this budget, to potentially get themselves re-elected, and then it'll be a nice boost to their economic performance should 250,000 people come in 2022-23. So.
And where in the past where we looked down on the nose of in the period of Peter Costello left government with no net government debt, the Labor government came in and did a lot of deficit spending and left some debt behind. I think the COVID has allowed the current political party to justify these high levels of debt, and we can push the negative effects of those down the road. So when they say they're going to spend a lot of money, generally it's over 10 years. So albeit that $10 billion on certain projects sounds like a lot of money, over 10 years it's only $1 billion.
Yep.
So I think the natural thing for this government will be going towards a balanced budget in 4 years' time.
Yep, absolutely. All right, guys. Well, thanks very much for joining us. If you've made it this long and you have any questions, type them in the comment section below. Otherwise, make sure you like and subscribe, and we'll hopefully see you soon.
Good night.